Hey everyone, it is that house guy Nathan Graham with What is Real Estate Education and Training, as well as EXP Realty. Listen, I just wanted to do a quick midweek video because we had some news come out of the US today with inflation numbers. I'll explain why in a moment. So first of all, if you're going to listen to 10 seconds of this video, I want to let you know right now, the whole thing is if you are thinking about buying in the next now to 3 months, get pre-approved, get that interest rate locked in. I'm beginning to highly predict that we're going to see the 5-year fixed rate begin to climb, which means all the other fixed rates will climb. We're probably going to see the 5-year fixed rate climb, and evidence is more and more abound for that. And let me show you why I say that. Okay, so sorry, actually, before I go into this super quick, this QR code, if again, this is all you're watching is the first minute of this video, if you scan this QR code, you can go right to my mortgage vendors that I recommend and highly recommend. They can get you locked in for 90 to 120 days at today's interest rate. So if they do go up, you are protected. So scan that QR code. My screen's backwards. Scan this QR code. That'll help put everything together for you. Okay, so this is why I'm saying it super quick. So U.S. inflation came in at elevated a little bit. Okay, so it's slower than last month, but elevated. Okay, so let's just quickly dive into this. The consumer inflation cooled on the month over month. Now it came in at 3.1%. Remember, the US and Canada want a target of 2% inflation, so we're still above that target. This is less than the 3.4% that we saw in December. And as you can read in the article, the 9.1% inflation peak of mid-2022. In this particular case in the US, it's excluding food and energy costs. Ours does not always do that. They calculate theirs a little bit differently. The whole point, though, is analysts were expecting this to come in at 2.9%. So with the inflation coming in a little bit higher, it doesn't sound like a lot, but because it's coming in a little bit higher, we are seeing markets react. And where we are beginning to see that in Canada especially is the bond market. So, okay, when they talk about changing interest rates, they're often talking about the variable rates. That's like when they have like a bank hold, or whether they increase or decrease rates. That has more to do with variable rates, revolving line of credits, and all the rest. When we look at our 5-year fixed or our 3-year fixed mortgages, this has very tightly correlation with our bond rates, or connection with our bond rates, right? So this is something that we watch to kind of predict the future. And as you can see, we know exactly when they made the announcement because we saw this jump in our bond rates. And we've been seeing this steadily happen. Canada's inflation came in a little bit higher than expected as well. Our job growth came in a little bit higher than expected. So that was earlier last week. So you can see that we've been seeing this gradually rise over the last 5 days. And especially if I go over the last month, again, just because I've been watching it, we had a little bit of a dip, but you can see that we're higher. It's on a gradual rise. So what does this overall mean is, first of all, our 5-year fix have not changed yet. Let's share that tab. If I go to Rate Hub, I can see that our 5-year fix, you can still get 4.85 to 5%. Your big banks start about 4.9. So that is absolutely fantastic news. But this will change right at the top of Rate Hub. It is basically saying, get pre-approved right now. Upward inflation, lock in your rate, because this is what we're expecting to see happen. Now, the long-term effect of this, we're not expecting, like, all this is going to do is delay the rate decreases, probably by a little bit. Like, I originally they were thinking March, and then April, and then June. This is kind of like, I was personally thinking that it was going to be April. This news coming out, and especially in February, if this stays stubborn, we'll probably be looking more at June, which basically means even keel. Like, we're not going to see home prices drop as a result of this by any means. The market is still absolutely active. It just means it might be more expensive for you to buy a house. That's all this means. And if you get locked in today, excuse me, then if the rates go down, you can get the new rate. But if rates go up, you're protected at today's rate. So if you are in that process of thinking about buying a home in the next 3 to 6 months, I would highly recommend getting locked in today. It doesn't mean you have to act today. Just get locked in today and have that conversation with your mortgage broker. Rest assured, we are still expecting decreases throughout the year. The last prediction, which was lowered, was 3.75% for our benchmark rate by the end of the year. We're still going to see that happen. It's just taking a little bit longer because inflation keeps on sticking. So anyways, I want to do this quick video because if you are on the fence, as I said, I'm going to keep saying this. If you are on that fence, go get locked in. Does not mean you're buying a house tomorrow. It just means you have a protected rate of today, because these rates, this 5-year fix, will go up at any time without notice. So anyways, if you have any questions, reach out to myself, reach out to your realtor. Again, scan the QR code. I have a lot of great mortgage representatives with the banks as well as brokers in there under the get pre-approved portion of the tab that'll pop up. Reach out to me, reach out to them, get pre-approved, get that rate locked in. All right. Have a great day, everybody. Chat soon.